found
Welcome to Second Take, the show that focuses on the issues behind the news. A constellation of golden ore bodies has emerged from beneath the skirt of the old Agnes gold mine in Barberton. Mining Weekly editor Martin Creamer is in the studio to tell us more. Welcome, Martin.
Thanks, Shannon.
Mining veteran Peter Skeet and his partner Wayne Hatton-Jones have introduced modern new thinking to this mine. What does this entail?
Well, you know, their vision is to compete with some of the big mines of the Witwatersrand, and that has been unheard of for Barberton. Barberton has always been associated with small holes in the ground and people scratching around to get a higher grade and always chasing grade, and there's never been great success there. And when you know, the Witwatersrand developed, people then looked across here and abandoned what they were doing in Barberton. And now the purchase by auction of this old Agnes mine has reawakened modern potential here. And instead of looking small, they've looked big, because of course Peter Skeet is both a civil engineer and a mining engineer, and he has been involved in huge open cast mining. And what he's really envisaging is doing open cast mining, but underground on a massive scale.
So what sort of equipment are they looking at using? You
know, you go there and there's two worlds. And of course they're going to preserve the first world. The first world is the old world. It started there 127 years ago. And so you've got the, you know, the small trams, the small adits, the very compact skips. They'll keep all that for the tourists. And this is part of their social labour plan. That's probably where they will be creating more jobs, because the other side of the mining is going to be capital intensive rather than labour intensive. And so they'll preserve that, and going through it is quite fascinating, because the way they built things in those days was very good, particularly the mechanical engineering and the control for the skip. So that'll be a great tourist attraction. But they're now planning very big adits. You know, that is an entry into the side of the mountains with large, big haul trucks, and you see they've already got some jumbo drills down, and everything is big and large now in the modern context, where you're virtually doing what one normally associates with open cast mining on surface, underground, but without the overburden, so that's less expensive.
Now, they've also mentioned that this ore body is virtually untouched. Why is that?
Well, when French Bob, as they call him, arrived there 127 years ago, he found these deposits, and it's part of a volcanic shear that he discovered. And they were always fairly reliant on getting high grade. But the high grade is not linear, so it moves around. So you follow narrow veins, and you vein chasing all the time to make a profit. So they virtually just scratched around. You know, they didn't really get into these. Of course, later, after the two world wars, I think the Boer War interrupted it, and then the First World War interrupted it, and there was a Second World War where I think it started after that. That started getting more intense, and Anglo-Val used to have this mine Agnes. So you know, the infrastructure there is very quaint, and it's pleasant. But of course the new big adits are going to be 6 metre by 6 metre to accommodate very big haulage trucks. So it's going to be very different.
What do you think the outlook for the company is?
It's one of anxiety at this point. You know, they fly to London tomorrow to try and raise capital. They've spoken to Cape Town, and they've spoken to Johannesburg. They've had 40 road shows to potential investors, but you know, one still has to convince those investors, because firstly, Barberton is an issue. You know, they think, oh, small mine, what are you going to do there? Secondly, junior mining has not got a good name. You know, there have been too many failures. So the timing is great. The gold price is good. The project seems excellent, but you know, the reputational issue of junior miners failing means that they've got to convince the investors. They want ideally about 340 million rand from these investors. They possibly might get 400 million. They are banking on possibly getting 400 million, and they will allow as much to flow from investors as they can get. But they're also hedging their bets. They've got Plan B and Plan C and Plan D just in case things don't develop. So the least they must get in from investors is 250 million. If they fail to do that, they will take Plan B, which is bringing in private equity partners. And, private equity partners flew in their Falcon jets. But, of course, they drive a harder bargain. So they would prefer to go onto a listing on the 18th of August on the Johannesburg Stock Exchange. But failing that, they will go for Plan B, which is the private equity situation. But if they get squeezed too hard by the private equity investors, they will then continue to mine at the rate that they're doing because, they're making money at the moment. It is at a level of low tonnage, 18,000, and they will be missing out on the upside. But they can, continue at the pace at which they're mining at the moment and then wait for maybe a better appetite from investors. But I think that they have been very transparent about the situation, the interface with the investors, and I can see a glint in some of the eyes that they are expecting to get this, that they're confident that they will raise the capital. But of course, you're always anxious at this time before you can get all these irrevocables in.
Sounds very exciting. Thank you, Martin.
It's a great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.